are back. Next, he is a highly profiled specialist in alternative asset management with extensive experience in crafting complex business multi-strategies for international markets. He has built a career around managing multi-million-dollar portfolios on the behalf of global funds and private investors, being an expert in building and pairing liquid and digital alternatives alongside more traditional portfolio investments. He now aims to shift stakeholders' mindsets to embracing cryptocurrency technologies. Please put your virtual hands together for the CEO of Stasis, Gregory Klumov. Gregory, nice to see you, my man.
Likewise. Well, that was quite a generous introduction. Thank you for that. I'm impressed myself.
All right, take it away. The stage is yours.
Thanks. Today, I will be presenting a crypto version of Euro, which my team years ago, and I think this could be one of the most important assets in DeFi, primarily due its stability, transparency, and also the interest rates that involved in Euro markets. So let me start first by getting a short introduction about the stablecoin. It's a Euro-backed stablecoin that is live on Ethereum network for more than 2 years so far. We are the only project that is audited by a top auditor. And the goal was to create a fungible infrastructure. How I call it is to contact multiple licensed endpoints, licensed intermediaries who could facilitate fiat to crypto transactions. So it's not just one endpoint. You don't face just one counterparty always. You can select multiple counterparties from our network and transact from fiat to crypto. Now, we currently have more than 30 million in reserves. We are the biggest non-dollar stablecoin on the market, and more than a dozen of firms transact with our asset. Recently, we launched an API to access this stablecoin from any online service or e-commerce web store or crypto exchange or anything you name it, by providing literally a checking account experience for people who are even unbanked. One can use our API and buy and sell a stablecoin backed by Euro using his existing bank account or a card, or just accept payments from other people who can move money through a Visa, MasterCard, or a SEPA transfer. Why Euro? I think that the dollar roll is overhyped, and macro-wise, I always thought Euro has a stronger position relative to the dollar, and this is why the value or the market share of non-dollar stable coins will increase going forward. That's definitely 100% certainty, because all new markets, if you take like 100 years of history, all new markets initially were priced in dollars, and crypto is no exception. It started to be priced in dollars initially before regional markets picking up, and will take over pricing these assets in the currency of their balance sheet, the currency they spend money in, the currency they pay taxes in. This is a brief comparison of other Euro-backed stablecoins, and so far we outcompeted all of them by transactions, by number of users, by total emission, and etc. And I think the reason for that is because we are fungible. The stablecoin has a number of endpoints where you can transact with it, and also we have this Euro as a service API, including Stasis Wallet, which is a non-custodial solution to move Ethereum, Bitcoin, other stablecoins around. It's called Stasis Stablecoin Wallet. I'll share the QR code a little bit later. But for now, I just should say that probably this is the easiest asset to buy and sell using your fiat currencies, and it is natural for DeFi primarily because of the interest rate. So most of the stable coins or some middlemans or counterparties have embedded credit risks, and those credit risks translate into the interest rates that borrowers pay or lenders get on platforms, including both centralized and decentralized. So, for example, if you want to borrow USDT, so Tether on platforms, first of all, not all platforms support that, and second, that the interest rate you will pay is clearly double digit. It's primarily because of the credit risks embedded in the Tether setup, Tether infrastructure. And if you look, for example, at alternative USDC, which is a more credible stablecoin, at least audited one, the interest rate is much smaller. And this gives you basically a sense of a difference of credit risk premium the market applies to a less transparent asset. So since we aim to be the biggest and the most transparent and the most credible institutional grade quality asset, and interest rates in euro are lower than in dollars, I think in DeFi space, this asset will enjoy the best borrowing rate you could find. And also, since we store our reserves in governmental securities, similar to Libra concept, but we started doing that quite a while ago already. And we are live, like I said, for more than 2 years. There's very little risk involved with customers holding our stablecoin. In fact, it's almost the same as they would be holding government debt. And this is how those low interest rates could be translated into the booming DeFi space. I will leave this QR codes for our wallet on the screen for a while, and would be willing to take some questions if possible. Again, the wallet is just a non-custodial solution similar to other non-custodial wallets where you can send, store, receive Bitcoin, Ethereum, other stable coins. And if you want to access EUROS, it has all the capacity and functionality to do that. And what's more important, it allows to send free on-chain transactions. So you don't need gas to send EUROS stablecoin through the Ethereum blockchain. And that's very convenient because even you can share this stablecoin to your grandparents, parents, and not explain them what a gas is, what Ethereum is. They get to understand easy checking account experience over a blockchain, which they control themselves. I want to make it more interesting for you guys. And if you download our wallet and email your new wallet address to w@stasis.net, we will gladly share 10 euros with everyone who does that. So again, it's w@stasis.net. If you send us your Ethereum address from Stasis wallet, we will send you some euros to play with. With that, I would like to open the floor for questions, if any. And let me see how this works. So I got a question actually today from the user of a Compound platform who wanted to add his euro assets to that platform. Unfortunately, so far, it's only the protocol decides what stable coins are accepted on the platform. We recently had a poll on MakerDAO community to include EUROS into the DAI's collateral, and the community voted for it. But going forward, I anticipate that the more community will use the stable coin itself, and the more questions it will direct to the protocol or protocol forums or community discussion boards, the faster the asset will be onboarded to these protocols. So the question is why, another question from Nino, why did we choose to create a centralized multi-based Euro stablecoin and didn't follow the decentralized MakerDAO concept? I briefly spoke about MakerDAO, and as we can see, it's the same credit risk issue, volatility, cost of volatility embedded in the product. Until DAI was collateralized only by Ethereum, the interest rates inside DAI or stability rate inside DAI were double digit. And it's impossible currently to bring the low interest rate to the crypto world without linking it to some fiat asset in an institutional credible form. Institutions treat credit risk very seriously, and they have their own judgment on every particular credit risk of every counterparty they face. So if you want rates from traditional capital markets, say close to zero or negative interest rates on Euro, to be translated to the crypto ecosystem, you need to create an instrument that is as transparent, as credible, and within the European Union, of course, as possible. So these institutions will be happy to hold exposure to it. If you think about a stablecoin as a product, an institution or a customer commits capital to purchase it and doesn't have any upside relative to some token, right? If you buy some particular token, even like Bitcoin, there is a risk reward that balances your appetite towards volatility, right? So if you anticipate Bitcoin will appreciate, say, 2 times or 3 times in value, you can stand the volatility and wait if it falls even 5, 10, I don't know, 20%. But with a stable coin, the risk is asymmetric, right? So you commit 100 euros of capital and it will never trade at 200 euro, right? So it always can trade at 100 euro or a little bit above or below, just because of the small market fluctuations. In fact, because of the commissions that the market system charges, 100 euro committed to a stable coin will always end up a little bit less when you convert it back to your account. So the incentive to hold this asset should be as transparent, as credible as possible, because otherwise there'll be no really risk reward to hold that asset. So in order to, again, I repeat, in order to get the interest rates from traditional markets to the crypto world, as we all want, to bring borrowing and to increase borrowing, for that we need to lower the borrowing rates, similar to mortgages, right? At 10% interest rate, very few people can afford a mortgage. At 5 people, some take it, and then at 2 or 1 or even 0, everybody and their brother is taking a mortgage. So since the demand is so elastic from the interest rate, we need to make sure the interest rate on the asset is as close to the financial capital markets as possible. Any other questions? Sorry, I looking here at the audience chat. Institutions, industry corporations, or banks. So yes, we do have several institutions using EURS in their e-commerce processes and acquiring. So acquiring is a process to accept cards from the customers and give them a product or service instead. We have several businesses in Europe using our token and processing transactions through us because it's cheaper to charge a customer card and get an instant settlement. We currently have just 1.5% fee, and it's not our fee. We just pass it through whatever we get from the counterparty. 1.5% fee to buy a stable coin with a card, and then the settlement is instant, right? It's a second feature of this product. So not just you have a lower fee as a merchant, you receive settlement the same minute, basically next three to 4 minutes. while with traditional acquiring, usually the settlement takes place in 20 or 30 days, and the fees are double or triple that, especially for foreign cards. For example, in Malta, there are companies who charter boats or provide some tourist-related services, and their acquirers charge them higher fees to process cards from other countries, not from Malta. And we have a much better, more efficient solution to do that. Okay. So I repeat, it's w@stasis.net if you want to get some EURS to play with. Later this year, there'll be a couple DeFi platforms who will initiate votes to include EURS in their asset pool to use them as a collateral and as a borrowing asset. Please stay tuned. Follow us in social networks, in Telegram community. And if you need anything, or if you want to ask about a product or service, please reach out to me directly at g@stasis.net. Well, it looks like Chris is not here yet, so let me take some couple other questions, guys. If you're still here, how do we make money? What's the business model? Very good question, Nino. I like it so much because stablecoin with low to negative interest rate is not really a business, it's a product. So we, for our stakeholders, it's a give back to the community, and we're using the capital we made by investing in Bitcoin early so far, expecting the stablecoin market to mature and for more currencies to follow, and for the market finally to realize that credit risk is an important metric. So currently, the market is not really worried about credit risks of biggest stable coins, but going forward, it will definitely count. So our business model for now is to wait until the other stablecoin projects will slowly degrade or go out of business, so we can capitalize on managing hundreds of millions to billions in assets. And since I have a hedge fund experience and I came from traditional markets, trading and global macro strategies, I'm pretty well skilled to manage a big money market fund backing a stablecoin in euro terms. Also, the short-term business model is to make services around the stable coin itself, not just generate yield out of the reserves, because it's not enough. Plus, the interest rate, is very low to negative. Plus, the market environment is still favoring non-transparent, liquidity-driven projects. So, short term, we are focusing on value-added services like acquiring, similar to Red Hat and IBM transaction. If you're not aware, there was a company called Red Hat Linux. Linux is a free operating system. You could download it and install it and use it for free. But if you want some service on top of it, you have to pay. So Red Hat was sold to IBM for 34 billion recently, and that basically confirms that there is a market for a free product, freemium business model, that when the customer needs a particular service, then he has to pay some fee for it. So our open API is completely available, open source to everybody to use Euro as a service and get literally Euro checking. But then if you want some perks inside it or additional functionality, you can reach out and we can discuss pricing for that. Question about compliance from Hamish. How do we manage FATF and KYC compliance? So very good question. We are compliant to all existing AML regulations, but we are better relative to other projects because we figured out a way to transact through a company that is liable for higher transactional limits relative to other European companies, or maybe American even companies. So currently we have 250 euro transactional limit, where you just need to supply your name and your email without any additional documents to buy and sell a stablecoin. But that limit is going up to 1,000 euro later this year. And that's all compliant with existing regulations. So up to 1,000 euro lifetime per customer, you will be able to buy and sell a stable coin using either a bank transfer or a Visa MasterCard. And that is a huge differentiator because all our competitors who try to introduce such services or crypto acquiring have a much smaller limit. On top of that, we managed to streamline the interface to pass KYC for customers. It's now very easy to upload an ID, an address, proof of ID, proof of address. That's the two documents we need. And this is pretty straightforward process, which allows to get a verified account and transact unlimited in size. So I think that answers it. And if there are no more questions, I will leave it at that. Thank you, guys.